like really good, really good. I just like now want to like really thank you for coming on the show. Like I have just a last question here, and
Sure.
this is like very kind of like personal or and important to me. So I have a friend circle here, and I'm also like one of them. Like we are just beginner investments, and I know many of the viewers and listeners listening us on the podcast would also be like one of those. Like we are just starting out. One of like I'm starting out in the ETF, other are starting out some like day trading and some cryptocurrency, but we are starting out. What are the mistakes you see people making? Because you have talked with a lot of people, you have experienced the journey. What are some of the mistakes, very common mistakes people are making in their early age? Like could you please share those kind of mistakes so we would know like these are some of things like we should be aware of?
Mhm. Sure. Yeah, the video cut out a little bit there. I think we're getting a bit of a connection issue. But if I
Oh,
heard you correctly, it's basically top mistakes that people are making, especially when they're just getting into investing, right?
yeah.
Um, yeah. So there's a few. The one I see. So obviously, there's the big thing about people wanting to be active investors versus passive investors. So beating the market as opposed to just being happy with receiving getting the index returns like what I do. So that I see that some people get really hung up on that, where they're really trying to beat the market, and so they buy these courses, they subscribe to these like software that's supposed
Mhm.
to tell them when to buy and sell, things like that. And so that's one trap that I see people falling into. So like I said, I'm very much into the passive investing style. That's all that I do. But there's such a huge industry telling people that, oh, you can get rich, you just buy our software, it's going to tell you everything, or buy our course, it's going to teach you everything. It's not that easy. And so just be really, really careful with that. And I mean, look, if you're the kind of person where you're like, this is your craft, like this is going to be your job, your career, you want to be one of the, like, if your goal is, okay, 20 years from now I want to be the best crypto
Mhm. Yeah.
investing expert in Canada or the world or whatever, right? Like if that's your goal, that and your whole career is going to be like, you're going to be pushing towards that, okay, then like if that's, then maybe I would say, then maybe, yeah, you have a shot because you're fully committed to that. But if you're not that committed, I don't know. I think just the passive investing route is just a better fit for most people. It's kind of like, look, you're either all in on this active investing thing or you're not. I don't know. I have trouble believing that people can just sort of, not go sort of
Yeah.
half-assed a little bit, right? And then still do great, because there's just too many people that you're competing against that are doing this as a full-time job. They're working
Mhm.
for companies that have, that are spending potentially millions of dollars in
Absolutely.
different research and different software and statistical modeling and all these things, right? So you're competing against these really, really intelligent people with like PhDs in this stuff. And so if you're just like, I'm going to spend like a couple hours a week on this, I mean, I like, the odds are against you, my friend, is all like, like I wish you the best, but it's going to be pretty tough because your competition is very, very fierce. So that's kind of one mistake. And then I think the other one that I see, so eventually people kind of go over to the passive investing route. A lot of them do. And the mistake I see almost often there is people trying to time the market,
Mhm.
where they'll be like, oh, well, I think interest rates are going to go up, and so I'm going to do X, or, oh, I think they're going to go down. So, oh, I think markets are going to go up. Oh, like, I mean, with Corona now, right? Speculation galore, right? Oh, I think the vaccine's going to do great and it's doing good, so I'm going to do this. Oh no, I think we're still not out of the woods yet, I'm going to invest this way. It's like, so just all this speculation about oh, I'm going to get in here and I'm going to get out here because I know when things are going to happen. And the reality is you really don't. And the people on TV that tell you that they do, they also don't. And it's just, so I would say just stop trying to time things and stop having this confidence that you know exactly what's going to happen, because honestly you don't. Like there's people that do this for a living and even they cannot predict it with 100% accuracy, right? Or even like 90% accuracy. So what kind of chance do you have of being able to to do this, right? So for me, it's just stop trying to time it, stop trying to get all fancy, just just invest now because the market goes up roughly, 2/3 of the time. You're going to see it go up, and like over the long term, right? So yeah, there's going to be dips. There's going to be times when it goes down. But if you know, okay, if I put my money here and I just do index investing and it's going to go up 2/3 of the time, it's going to be up. Well, wouldn't you want to get in as early as possible? Because yeah, you're going to have some dips, but I mean, it's going to be on an upward trajectory, right? Which it has been. So why wouldn't you want to get in as early as possible when you know that it's going to be sloping upwards, right? Instead of like trying to time things and you're missing out on these gains. I mean, who could have predicted that the stock market was going to recover as quickly as it did after the major collapse in Corona, right? But my portfolio fell 30%, during that time, right? And then I'm like, how am I? And then it was up 10% by the end of the year. I'm like, how? It's hard to wrap your head around. You're like, we had this crazy decline. We had, it's still not fixed, right? There's still Corona, still very much of an issue here. How could you, as an index investor, how could you be up 10%, right? Because so it just goes to show, right? You can't predict these things. And so stop trying to and just get in the market and just ride it up, right? As an index investor. So I don't know, those would be my big things. And watch out for crazy high fees, like with active management mutual funds. That's been talked to death about on my show, but just we have some of the highest fees in Canada when it comes to mutual funds. And so just be crazy careful with that. Don't just go into some financial institution, tell them you want to invest, because there's a very good chance they're going to try to put you in some high fee funds. So just learn about index investing. It's so easy to do yourself now with the tools we have. I can go on for a long time, but that's in a nutshell.
I couldn't agree more. Like sometimes, like I see, like in young generation, like with my friends, or like even in young generation, when you see like so much high return, like in cryptocurrency, like you see like TikTok. So I made like 200%, 300%.
Yeah.
If they're making 200%, there is definitely someone who is losing 200% because money is not creating. Like they're just traveling from some 1 to 2.
Yeah.
And I always say, like, to them, like, again, like I don't have that much experience, but if you're just getting into ETFs, 8%, 6, 7%, 8% in the long run is also like a big number, like when you start getting compound. So